Hey Forex fortune hunters, welcome to our video series on how to use Metatrader to crush the Forex. In this video, we're going to take our old standby template, Thailand THW, based upon our book, The Amazing Zeelander Flytrap Forex Trading Strategy, which was published way back in 2015. We're going to show you how it works, how it's been producing an enormous number of pips during this last cycle in the Forex market. And then we're also going to add a couple of additional indicators to show you how you might customize this template to meet your needs. So hold on to your hat if you're ready for profits. We'll get started right after this. Hey, fortune hunters, for those of you who have learned from the Amazing Zeelander book on Kindle about our signal line, this will be a quick review of that. And then, as I mentioned, we're going to add a couple of additional indicators, not to clutter the screen, but to give you an idea if you'd like to customize your own templates, how you might do that and give yourself even more evidence of whether the trend is higher or lower. In this particular screen, you'll see the Euro USD. It's a 15-minute chart, just like we used in the book. And in addition to our multiple moving averages, which you see here, the 12 up to the 24 EMA, and then 38 and a 48 or 50 EMA up here to give you some backup and a stop loss level you can trust. In addition to the multiple moving averages, of course, we have our standby RSI and our 45-55 band, which you can see here. And as you can see, if you can't penetrate the 55 to the upside, you're not going anywhere to the north. And this is a continuation, obviously, to the downside. Now, this particular chart is from the 15th of January, 2021. And we can switch around, but in this particular case, I thought I'd show you the good trade entry on the downside. Now, here's our signal line, and for those of you who may have forgotten, let's open this up just a little bit here, and notice that when we have a crossover of the 12 and 24 to the downside, what happens is that a medallion appears. But in addition to that, by adding this indicator, the signal line, what you've got is an opportunity to take a look at when the moving averages continue to cross and confirm a downward trend. And by that I mean this particular candle right here, the closing value of that candle when we saw the medallion appear is the level at which the line will be drawn on your chart. So when you see a blue arrow like this, and you can see that this was in the Asian session and we had a lot of kind of consolidation and back and forth here, you have this entry level downward move, which means that the 12 or perhaps the 8, depending upon the setting that you'd like to use, the moving average has confirmed the downward trend by crossing over the signal line value. Now let's just quickly show you how that works again. To review it for those people, up comes some of my news announcements, and keep track obviously in Forex to make sure you're not going to get blindsided by a fundamental. But in any event, let's take a look at our indicator. We right click on the chart. We have the indicators list, and we go up here to Wilmot signals. And by the way, as you may know, all of the indicators and templates that we use are available to you free of charge for use on Metatrader at our Dropbox.com site, and there are details about how to send us an email down in the description below this video. If you have not yet had those, or if you'd like updated versions, just shoot us an email and we'll be happy to get those to you free of charge. Okay, now here's the situation. You can use the 12 as the fast moving average. The slow is at 24, as I mentioned, and this signal period, here I have it set to an 8. If we wanted to go back to the 12, we could do that easily. And then you will see on the, as soon as we click OK, you'll see perhaps the arrows will change. as we take a look at this up in the top section. And you can see this one moved. This one is the same. Now, what we were doing right here was to taking a look at how this was cycling around the signal line for a period of time in that Asian session. And then as we moved into the London Open, which is right here, 3 a.m. East Coast Boston and New York time, we had that continuation of the move downward. Now, also, as many of you know, we like to try to wait for the pullback into the bands, before we are confident that our entry is a good one. We want to make sure our risk reward is aligned properly as well. And you can see here, and in many instances, when you get this arrow, it's a significant move to the downside, and we'll show you some of those. You don't want to be getting in when your stop loss back above the signal line is going to be significantly higher than you'd like, obviously. Okay, so in this particular case, here was our entry, here was our pullback, and we could measure from the signal line down into this area, the 28 pip move, and down into this area as we moved into the US session later in the morning, 62 pips to the downside. Now let's just take a look at a couple of others here and see what we've got going. Here's one to the upside, and this one occurred on the 18th of January. And let's take a look. Today's the 20th because it's Inauguration Day, and so this was the Monday morning situation. This is what happened on that Monday morning on the 18th. We came down, we continued lower, we had a double bottom, we continued lower through the London session, but then we began to have a reversal later in the afternoon. This would probably be, let's see, in the time frame down below, 1800, that's 11 o'clock in the morning on the East Coast. So we've got this as the solidification of a potential trend change. And I do like to use the 15-minute chart as my baseline chart, maybe the 30 to get a convincing move one way or another. Notice also we have our arrow here. We have a crossover back above the 47 EMA here to the downside. We have our pullback into the bands. Now, late in the afternoon, as many of you know also, you want to be careful. The spreads increase as you reach the changeover time of day. Lots of people out of the market at that point in time. Europeans are all closed up. Very few Americans left trading. This is a consolidation period typically, and then not until the Asian session wakes back up again in the evening time do we see a significant move typically. So be careful here entering the trade unless you can double check your spreads, and you can do that by coming to View, left click, Market Watch, and if we were to drop down in our menu here, you'd see that the Euro and the USD, let's go down here where we are, the Euro and the USD are now 1.1 pips, but if you were to be watching this later in the afternoon, you might see a significant difference and a widening up to as many as 3 or sometimes 4 pips, depending upon the time of day. In this area here, you got to be careful of those dicey situations. Now, notice over here, as we move into the Asian session, we get a continuation to the north. We've had this consolidation here. This would be a potentially good trade entry. We also have a pullback here and a reversal in the trend. And as you can see, pullback after the arrow, get within 10 pips of the signal line to begin with, and then you're looking for a reversal confirmation. And what I like to see here in this kind of a situation is the potential for a close above the closing value of the last 2 candles. That's a pretty good move. That means half hour we had a pullback down into the bands, and then we got a convincing move higher. So in this area, you want to be looking for that move north. And at this point, you wouldn't use a signal line. You'd probably use your 38 or 47 or 48 EMA as your stop loss level. Okay, now as I promised, let's just take a deep breath here and add an indicator or two to see how we can continue to improve potentially on this template. What we're going to do now is to, just so that it'll be easy for you to see, we're going to get rid of a couple of the oscillators here. Let's get rid of the MACD, and let's also get rid of the RSI just for fun. We'll clean up our screen. What I'd like to do now is to add the indicator that we use often, and that would be our Itchimoku Kinko Hayu. This is the Japanese indicator, and basically I've taken out the moving averages and we just use the cloud. You can see here in the parameters and the colors, if you delete the first three colors in the indicator, you're going to end up just with the cloud. And I'll show you how that looks here. And so sure enough, there we are in an uptrend for sure. Notice that as we moved into this period in the 11 o'clock, 12 o'clock noon hour in the U.S. The day before on the 18th, that we did have a breakout above the cloud, which was combined with our moving averages moving to the north. Here was our white up medallion, our arrow confirming the moving averages had moved higher, and so forth. A pullback into the band's a great entry right here if your spread and pip count is okay. You're going to have to wait probably for the Asian session to get your uplift, but it's a great entry. Okay, in addition to that, those of you who've watched these videos before know we also would like maybe to look at the trend magic. So let's see what we've got here. We'll go to, this time we'll go to View Navigator. And down here, we'll take a look at trend magic. We'll left click and drag it onto the chart. We click here and let's change the blue to a white so it's clear for you to see. I've given lines here that are 2 in width. And now we'll go here. Notice that we've also had a crossover of the trend magic, a change from red to white, meaning change from resistance to support. And we've also had a crossover of trend magic and the signal line. And this is another indication that it's safe to get in the water. Notice how we can see here, even when we pull back into this area and we have this move north in the as we approach the London Open on the 19th, yesterday, Tuesday of inauguration week. This was our move higher, then a pull back into the bands. Obviously, you don't want to get into this area here. And you also do not want to take the counter trend trade to the south because it is going to have limited opportunity to break down. Okay, in this area here with a turnover on a 15-minute chart, what I would also potentially recommend is that you draw your line here with this one, and then maybe drop down at that point. Now that you know you're in business on the 15-minute chart, drop down to the 5-minute chart. Notice here on the 5-minute chart, we have a brand new indicator here. Once we had the change on the 5-minute with the white medallion, this was the pullback you'd be looking for right here down to the Zeelander signal line, and then off you are and running. So folks, I hope that will help for this particular video, give you an idea. All of these indicators, as I mentioned, are in the Dropbox file that we'll share with you should you send us a quick email down below. And with that, I wish you the best of luck with your trading. Please feel to comment, ask a question below if we can help in any way, and good luck with those Forex pips. See you next time.